Hi there, and welcome to Safe Option Strategies, and welcome to our presentation of Ultimate Stock Market Success, How to Never Lose Money Again in the Stock Market. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I got to tell you, I really appreciate whatever you've been doing. I appreciate you taking some time out of your schedule to watch this presentation. I know there's a good chance that you've seen one of our presentations before. I know a lot of people will come back and watch these presentations over and over again, and maybe you see something that you like enough that you keep coming back to see if you can learn a little bit more. You may be watching one of our presentations for the very first time. Let me tell you really quickly, I am going to try to cram a lot of information into a fairly short period of time. My goal is to cover a lot of stuff and still be very respectful to your time and be very respectful to the other things that you have to do. So as I go through this presentation, I'm going to go fast. Luckily, you have the ability to pause. You can rewind. You can start over, whatever you need to do, because I'm going to go through the information very quickly. Let me tell you a couple of things before I get into the heart of this information. I want to be brutally honest with you. I want to be very transparent. One of the most frustrating things to me, and I think most people feel the same, is when you feel like you're being taken, when you feel like you've got online to look at something like this for one reason, and then you discover that it was for a completely different reason, or people tried to hide information from you that would be valuable in helping you make some kind of a decision. So I'm going to put all my cards on the table right now. And the reality is you might decide to log off and not watch the rest of the presentation. But for those of you that stay logged in and watch this entire presentation, I am going to teach you some things that I hope will be very beneficial to you in trading the U.S. stock markets. Now, it doesn't matter to me if you come from a background of having never traded stocks and options yourself. It doesn't matter to me if you are an experienced trader in stocks and options and complex strategies, and maybe you're just looking for a little bit of an edge or something to tweak what you're doing a little bit, and most of you are probably somewhere in between. If you're brand new, some of what I say may seem like a little bit of a foreign language, and other parts of it will make perfect sense to you, but I can tell you this. Everything I'm going to introduce you to over the next 45 minutes to an hour, I can teach you how to become expert at. And that's what we do at Safe Option Strategies. When I say I'm going to put all my cards on the table, again, in the spirit of transparency and being brutally honest with you, I hope what you see in the next 45 minutes to an hour is enough to make you want to take a close look at the education programs that we sell at Safe Option Strategies. Now, we put a lot of information on our website that's free of charge, and you can definitely learn some things that will help you out a little bit, but we have a very complete education program, and that education program, amongst other things, is to help you survive things like this so that you're never scared again by situations like this. This sell-off we had recently was a horrible thing. It wiped out people's portfolios. People that had just retired were suddenly 30 to 35% worse off than they were just a couple of months ago. People that are getting ready to retire had to rethink whether they could afford to. People that were close to retirement and getting laid off from a job or having a company go out of business are now wondering if they're going to have to go back to work and find something else to do. A large part of what we teach at Safe Option Strategies is to prepare you for things like this so that they're not damaging to your money, so that you don't lose money when this happens. Now, we could not predict that this was coming. Nobody can. And I'm going to talk about that a little bit more in just a second. But I hope that you view this presentation with the understanding that if you see something here that sparks your interest, that if you see something here that you think, wow, if I could learn that, if I could get good at that, that could really make a difference for me. It could really change, it could change my life. It could change my finances. It could change my future. And that with that thought, you will at least take the time to contact us and inquire about some of the promotions and the discounts that we offer and some ways we could make our education work for you. But let me add something to that. At the end of this presentation, if what we're doing as a company in terms of our paid for education and the courses and the programs that you can buy through Safe Option Strategies, if they're not the right fit for you, if you feel like they're too expensive, if it's not the right timing, whatever the case might be, I hope you can go away from this class that you're watching right now and say, you know what? I learned something. I got something from this. It wasn't a 45-minute to an hour-long sales pitch where all they did was try and get me all hyped up and all built up with emotion so that I would plunk down a credit card and buy something. I don't want that to be the case. If what we're doing has an appeal to you, I think you'll find that compared to a lot of other things out there, our programs are incredibly affordable. They're not cheap. I didn't say cheap. But if you're willing to make an investment in yourself and learn how to get good at this stuff, it can be incredibly profitable. It takes a small investment to do that. But I've just put everything on the table. Like if you're one of those people that is looking for something for nothing, you're still welcome to watch this entire presentation, and I will try to teach you some things that will be helpful. But I'm not going to help you succeed to the level that you could if you're just willing to make an investment in yourself and invest a little bit of money and a little bit of time in learning this stuff. So with that said, let's dive in. Like I said, I've got a lot of information to cover, and I'm going to do my best to keep this from being too lengthy, but we're going to go through a lot of things, and you're going to learn some great things. This event we had recently, this drop in the market, everybody refers to it as a black swan event. 35% drop from where the markets were just a few short months ago to that lowest point that they hit. And one of the problems with this, the obvious problem is people lose a lot of money when this kind of thing happens. One of the other problems is you simply cannot react fast enough to this type of a situation to save yourself from losing a lot of money. There's a company that I guess they're a competitor of mine. They sell some expensive software and they sell some expensive programs and expensive. I say expensive because relative to what we do, they're really overpriced. But they sell all this stuff, and they claimed on a TV commercial that I heard a couple of weeks ago, we predicted that this was going to happen because of our unique software and because of these amazing formulas that we've written. We predicted that this was going to happen. Well, what this company leaves out of their TV commercial is that since 2008, when the U.S. stock markets sold off more than 50% over the course of a year, they have predicted this event on average 3 times every year. That means that prior to this drop that they claim they predicted the same thing would happen 36 times, and they were wrong all 36 of those times. And on number 37, we had this COVID-19 virus come out, and it just created havoc in the stock market. So the reality is, no matter what people say, you cannot predict this type of thing happening, but you can be prepared for it so that the next time it happens, you don't get stung by it. It's almost as hard to predict how fast things are going to recover. You realize from this bottom point right here to where we were just a day ago is actually a gain of 32%. And the U.S. stock market, the averages of the stock market have never gone up 32% in this short a period of time. 32% would be a phenomenal return on an annual basis. 32% for most people would say, wow, that's triple what the U.S. stock market averages year in and year out. And we've got it in barely 2 months. And that's almost as hard to predict, because what a lot of people do is they start to manage their portfolio for this downward trend. And somewhere in here, they finally get some trades on that are going to take advantage of this downward trend. And then suddenly, just in the blink of an eye almost, we're moving up again. And this can be just as devastating. It can be just as difficult to deal with. I'm going to cover 4 basic things in this presentation to teach you how to be better prepared, how to not lose money anymore, and how to get some incredibly phenomenal profits in the stock market. Number 1, I'm going to teach you how to be right 75% of the time, and probably more important than that, what to do the other 25% of the time. Now, I hear people from time to time. I hear my competitors. I hear other people say, you know, I'm right 85% of the time. 85% of my picks are good. or I heard one company a while back brag that 92% of the trades they send out in their advisory are profitable trades. Let me tell you the problem with that statement right on its surface. It doesn't matter how many trades you place that are profitable if the ones that aren't profitable are taking away all your gains from the other ones. And I'll get into that in more detail in just a minute, but I'll show you how to consistently be right 75% of the time, but more importantly, what to do with that other 25% of the time. I'm going to show you how to take the risk out of trading completely and how to set up risk-free trades. Now, I know that's a bold statement. When you hear someone say, I can show you how to trade and there's no risk in it, your instinct is probably to run from that and say, no way. It's got to be a bunch of bull. It's got to be a gimmick. There's no way to do it. Even I am required by the SEC to put things in print on my website and in my classes and presentations. Even I have to put some disclaimers in there that say, things like all trading comes with risk and you're responsible for your own losses. I'm required to do that, but I'm going to show you a way. I'm going to show you a way to set up trades that have zero risk in them, at least for a period of time, and that can be adjusted to some phenomenal profits. And then I'm going to end by showing you how to learn and profit at the same time. And I'm going to use one of your favorite little analogies about fishing. Okay, let's talk about how to be right 75% of the time. This is important because there are people who struggle with feeling like every time they make a pick, it's the wrong pick. I was having a conversation with a gentleman just yesterday. Very intelligent guy. He had a background in banking and finance. He understands calculus and algebra and complex formulas on a much, much higher level than I have ever understood. And he said to me, I just need help picking the right time to get into trades. I need help knowing when is the best time to enter or exit a trade. And he said, I'm probably only right 50% of the time. It's like going to Las Vegas. I can roll those dice over and over again, and it feels like it's just luck when they're going to come up the right way. So there is a trick to being right 75% of the time. This chart that I had on a minute or two ago of the Dow Jones Industrial Average and the big drop that we had, I've got this chart set up with the relative strength index up there at the top. And I've got it set up with the 5 and 22-day moving averages. And to make it fit a little bit better on the screen, I cut it off right here. But down below here, normally you would see the moving average convergence divergence. I'll bring up a screen that has that in a second. When I set up these charts, I use a company called stockcharts.com. They're a free company. I love them. I love the looks of their charts, but I have to customize how I want this stock chart to look a little bit. And when I pull this thing up, I've got, just for the middle part of the screen, I could put Bollinger Bands, horizontal lines, Ikimoku clouds, and if that's not enough, I want a full Ikimoku cloud, Keltner channels. You can see the little checkbox. I was setting this up with the exponential moving averages. There's a lot of things to choose from, and all of these different things are based on mathematic formulas that help give us information about the trend of the stock. And that's just the beginning. On one of the other sections of this chart setup, look at all these choices I have, and look at this little button I have down here that I could scroll down to even more choices. Do you realize if you start adding all these up and you start doing the algebra that you learned back in high school and college, do you realize how many combinations there are that exist with all of this stuff? How many different ways you can put this together? And the point I want to make with all of this is that there is so much technical charting information for stock and option traders out there that a lot of people literally get frozen in their desk chair with what we call paralysis by analysis. There are so many things they can look at, and oftentimes they're waiting for too many of these things to line up exactly the same way at exactly the same time, and it never happens. There's an easy fix for that. There's a really easy fix for that. Here's a chart that has the MACD at the bottom of it, like I was saying. There are millions of people around this country and around the world that would rely on these different indicators to decide what they're going to do. But do you know somewhere in the neighborhood of 85% of them look at the RSI, the 5 and 20-day moving averages, and the moving average convergence divergence. And if for no other reason than the fact that that's what the majority is looking at, these three technical indicators have a tendency to become a self-fulfilling prophecy. When they all three cross over, when the RSI crosses over this 50 line, when the MACDs, or excuse me, the 5 and 20-day moving averages cross over each other, that blue line and red line right there, and when the MACD lines, this is an indication of momentum of buying and selling of a stock, when they cross over relatively close to the same time and all going in the same direction, 75% of the time, that is an indicator that you're going to have an actual trend change, something that lasts more than a couple of weeks or more than a couple of percentage points in that new direction. This is a trend change from here to here. This is a few days of pullback, but without these things crossing over these lines, there was no trend change. And so for a continued period of time, you had a bullish trend. When we crossed over the next time to the downside, it wasn't for as long a period of time, but it lasted for a couple of weeks and went more than a couple of percentage points. When it crossed back over the other way, it lasted for more than a couple of weeks. It had one little head fake right here, but generally it lasted for more than a couple of weeks, more than a couple percentage points. Historically, when the RSI, the MACD, and the 5 and 20-day moving averages cross over at the same time in the same direction, and the same time means within a few days of each other. They don't always cross over on the same day. But when they cross over relatively close to the same time and in the same direction, 75% of the time you get an actual trend change. And these trend changes make your trades far more predictable. If all you could do is go from, spinning the roulette table and being right 50% of the time, whether that thing's going to hit red or black, to 75% of the time, you're ahead of the game, and you don't have to overanalyze things from that point forward. Now, let me be very clear. One of the things we teach in our program is how to look at other things beyond this. We look at levels of support and resistance. We look at the volume that a stock is trading on, the open interest in the volume of the options that trade with that stock. We occasionally take a look at Bollinger Bands. We read the news. There's a lot of other things we pay attention to. But the most accurate predictor of the trend change is the RSI, Relative Strength Index, the 5 and 20-day moving averages, and the moving average convergence divergence. And that one thing alone, you ever heard this acronym? Let me get my marks off the screen here, the ones that aren't supposed to be there. Keep it simple. And I'll let you fill in I made that look like a swear word, didn't I? In my house, it is a swear word. We don't use that word. Keep it simple. KISS, that's something you can remember. I talk to people almost every day who want to talk shop, and they want to talk technical analysis and chart reading, and that's all fantastic until I realize in most of those conversations, they're overanalyzing things. Now, this is the really easy part. This is the much harder part. What to do the other 25% of the time. This is a scenario that you're familiar with. If you've seen our presentations before, you've seen me give this example many times. I hear this, some form or some variation of this scenario, I have heard thousands of times in the 15 plus years that I've been teaching people how to successfully trade stocks and options. 4 out of 5 trades. With some people, it's 5 out of 6. Some people, it's 9 out of 10. They've got all these trades going the direction they want. They take the profit from this trade. They add it to what they started with after they closed that trade. So they're starting their next trade with the combination of these. They're starting their next trade with the combined total. That's just compounding your earnings. That's a good thing to do. I would never tell someone not to compound their earnings. It's really smart. But whether it's 3 out of 4, 5 out of 6, 9 out of 10, 19 out of 20, it doesn't matter. When that next trade moves against you, doesn't have to be a COVID-19 black swan event. I remember being in a trade on SanDisk. A lot of you know SanDisk, the little plug-in flash drives. They were bought a couple years ago, a few years back by Western Digital. But SanDisk, I used to trade them very actively. SanDisk was in a bullish run, one of the best bullish runs they had been in for a long time. And prior to their earnings report, without any warning that they were going to do it, they issued a press release at the close of the market one day and said, we're going to miss our numbers really badly. When we report our sales numbers in a couple of weeks on our earnings report, we're just going to warn you right now, we're going to have a major miss. It's going to be bad. Can you imagine what the stock did the next day? It collapsed. It was like a 20% drop the next morning. In a blink of an eye, you can go from having this profit added to this profit added to this profit, and you compound those trades, and all of a sudden, if you're trading options only, if you're doing some type of a spread trade or directional long calls or puts, if you're doing some type of option only trade, you know how fast you can be down 20, 30, 50, 80, 90%. You know how fast you can be down in a trade. And in the blink of an eye, what seems like the blink of an eye, 3 out of 4 trades have gone your way, but you're losing money. And like I said, some variation of this is probably the conversation I've had with people looking at our programs more than any other conversation. It's that 1 or 2 trades out of a bunch of them that are killing me. So how do you fix it? What do you do with that 25% of the time that you're wrong? Well, you go back to the start of the trade and you make sure without exception, every single time you're going to enter a trade, you plan your trade, you plan your exit. Now, planning a trade means you're not just taking a stock pick that someone gives you. Your next door neighbor's cousin's best friend's work buddy gave you an inside stock pick and you say, okay, I'll throw a couple $1,000s at that. That's not planning a trade. Planning a trade is you've done your homework, you've looked at some charting, you've done some fundamental analysis on the company. You're making an educated guess, but it's educated, not some crazy pick. You plan your exits. You don't get greedy. You make sure you know what you're going to do to get out of that trade. If this thing goes the way I expect it to go, what am I going to do to get out of this trade? Here's the part that most people don't have any idea at all how to do, and that is plan your backup. And let me tell you this right now. If your backup is a stop loss, I hope you're ready to make some major changes or you're going to keep losing money. Only time I ever use a stop loss is if I've got a lot of profit in a trade and I'm going to leave it to go to more profit, but if it turns and starts to go down, I'm going to let a stop loss exit me out of the trade, guaranteeing that I still have some profit preserved. And even then, it's not a guarantee, but it increases your chances. But if you're relying on stop losses as your backup plan, you need to rethink everything you're doing. What you need is to learn how to make adjustments to trades. I'm going to give you a couple of examples in just a second. And I know that the term trade adjusting has become this buzz phrase over the last 4 or 5 years. I'm hearing it more and more and more from my competitors. Folks, I've been teaching trade adjusting and complex trade adjusting for over 15 years now, and I've been doing it successfully. If you want an expert in trade adjusting, don't listen to someone who just started copying the phrase and throws a few terms out to you about rolling options and think that they know how to adjust trades. I've been successfully teaching people to adjust trades for over 15 years. We know what we're doing here. A trade adjustment, very simply put, is when you roll one or more option legs that are a part of a trade to a different strike price or a different expiration date or both, or if you add an option to a trade, an option leg to a trade for some reason, and in the process of doing that, you turn the direction of the trade to match the new direction the stock is moving in. And then you got to learn how to stay with your plan. If you're taught correctly how to make trade adjustments, you will have confidence sticking with it and executing and performing it at the right time. Now, I want to circle back around to stop losses and tell you why I think stop losses are so dangerous. Very recently, this is a short-term stock chart of Amazon. I'm willing to bet that no matter what part of the world you live in and where you're at right now listening to this presentation, you know who Amazon is, okay? No, if you don't know who Amazon is yet, I'm not sure how it's possible that you have internet and you're able to watch this presentation. So we all know who Amazon is. Amazon's had a phenomenal run up these last couple of months. Last month and a half, Amazon has been on an absolute tear. So because we like the trend and because all the indicators were there and because everything looked good and we're confident, we planned our trade and we planned our exit and we planned our backup, we got into a trade on Amazon just a little more than a week ago. And we sent the trade out to our students at the close of the market on this Monday night. And on Tuesday morning, we opened the trade and Amazon was up a little bit at the open. That's what this bar means, is they were up a little bit at the open. And then throughout the day, Amazon started to sell off. And they started to go down. They started to go down. They started to go down. And the trade that we opened Tuesday morning, by the close of the day on Tuesday, that trade was down 20%. Now, those people that use stop losses as their backup plan, they were out with somewhere between -5 and -20%. They're out of the trade. It's done. They've lost money. Even if it's a small loss, it's lost money. They're done. We planned our trade. We planned our exits. We planned our backups. Our strike prices of our options were down here, and Amazon didn't get all the way down there. So we looked at it and said, yeah, you know what? We're down 20% right now, but there's no reason to exit this trade. There's two reasons why we could feel that way. Number one, we weren't using a stop loss that triggered us out automatically for a loss. But number two, we knew that if Amazon did continue down and drop below a certain price, we knew what our adjustment strategy was, and we were confident we could put on that adjustment strategy, and we were confident that we wouldn't take a big loss. Now, Amazon fortunately turned and skyrocketed up over the next 5-6 trading days. And guess what? We got out of the trade, having been in it for about a week, with a 30% gain. Okay, in this case, we didn't have to adjust the trade, but simply having that plan put together the correct way and knowing when the right time was to execute on that plan and trusting our adjustment strategies and not getting messed up with stop losses and not getting fearful and panicked and triggering ourselves out of this trade without a stop loss, we're 50% different right there. 30% profitable instead of 20% down. Let me show you another example of one that we did adjust. A month and a half ago almost, we got into a trade on Zoom, and we got into the trade right back in this time period right here. And after a couple of days where the trade was starting to go profitable, we suddenly had 4 or 5 days in a row that it didn't just sell off, it sold off big time. And our adjustment strategy was put in place. We followed through on our adjustment strategy. But you know what? Right after we did that, this thing reversed again. And suddenly we're getting these technical crossovers to the downside. And a few days later, we're getting technical crossovers to the upside. And you know, I had students who were newer who were thinking, everything's out the window now. I trusted the adjustment and I adjusted it from a bullish to a bearish trade. And now it's going back the other way. I said, you know what? We have an adjustment plan. When we adjusted to go this way, we set up a new adjustment plan in case this happened. And we stuck with our adjustment and we got the bounce back up that we needed. And then when it dipped here a little bit, we didn't panic and change anything, but we had to make another adjustment just because we hadn't quite got everything back before it sold off again. So we had to go to a third adjustment. And then Zoom has had a nice little run to the upside since then. And as of the end of this week, we will be out of Zoom with a 5% profit. Now, here's my favorite part of this recent trade. This is a real trade we did just recently. Here's my favorite part of it. Let me once again clear all my marks off of here. Our trade showed that it was down 80% right there. Then there were some people panicking. I've done this for a long time. I know how to adjust trades. When that happens, we go to our next adjustment. And we're going to get out of this trade 5% profit in a worst case scenario. When you have the ability to adjust, when you know the right adjustment to put on at the right time, this is what happens. Those same 4 out of 5 trades that you place end up vastly different, because when that last one moves against you, because you set it up correctly and because you know how and when to adjust it, instead of taking a 50 or 70 or 80% loss, we got back to a 0 loss. And look at the difference. Same 3 out of 4 trades, same reinvesting of the profit. So the next trade starts out with a little bit more, same compounding of those profits. And instead of being down 13 or so percent, we're up 59%. We're more than a 70% difference in the right direction. And most of what I'm showing you up to this point is applicable to option-only trades. But I'm going to show you some adjustment stuff that applies to stock and option trades as well. But let me pause for a minute before we go on to the next part of this, before we get into zero risk trades. Let me just tell you, folks, I told you I've had thousands of conversations with people who are profitable 3 out of 4, 5 out of 6, maybe 5 out of 7, maybe it's 9 out of 10. 17 or 18 out of 20 trades they're profitable on. And the ones that they're not profitable on are the ones they're losing sleep over at night, because they're wiping out all of their gains. In some cases, these people are breaking even, but they're spending a lot of time to just break even. You can do that in a savings account, at least until interest rates go negative. Then you'll have to pay to have your money in savings. But until interest rates go negative, you can not gain anything and sleep well at night putting your money in a savings account. Don't flounder with no profit or insufficient profit to accomplish what you're trying to accomplish and spending all the time that you're spending. Okay. You want to learn how to do this? We can teach you how to do this. Now, this is the one that really gets people. How do you trade with no risk? You want to get the best sleep of your life? Have a portfolio that is set up to make profits equal to or greater than the market averages, and have zero possibility when you lay your head on that pillow at night. Have your portfolio set up so that there is zero possibility of losing any money. Okay, to understand zero risk trading, it starts with the long put option. I'm not going to teach you the long put option. Many of you that are watching this presentation know enough about option trading that you know what a long put is. Okay, stock goes down, long put goes up. It's in almost every way you can imagine. A long put option is like an insurance policy for your stock. Just like you'd go out and buy an insurance policy. If you went out and bought an expensive car, you're going to get an insurance policy for it. If you went out and bought a car that was worth $100,000, you're going to go out and get a $100,000 insurance policy so that if something happens to the car, you're protected. You're going to have to pay a little bit for that policy. That's your premium. That policy is going to cover you for a certain period of time until you have to pay your next premium. That's how it works with an automobile, with homes, with collectibles, valuables, antiques, jewelry, art. That's how we insure it. We purchase an insurance policy that covers us at a certain price for a certain period of time, and we pay a premium for that. And our insurance company is hopeful that they keep the premium and never have to make good on paying the insurance claim. When you buy a stock and then you buy a long put option to go with it, you have an insurance policy where you are covered, your asset is covered for a period of time, and there's a premium associated with it. And then when the stock goes down, if it drops, the value of your insurance policy goes up to protect you from that loss. So you buy a stock for $100 a share, you get a long put option with it. The stock goes down to $50, and you have the right to sell the stock at $100. And so instead of being out $50, you're only out the $5 premium that you originally paid for that. That's a way better scenario. That's not quite risk-free because you're out the cost of the premium. Now imagine, think back to high school or college when you got your first driver's license, and maybe when you got your first car and mom and dad paid for your insurance. Well, if you add a covered call, and I'm not going to, in the interest of time, I'm not going to go into covered calls. Most of you know what a covered call is, and if you don't, we have a free class on our website that will teach you what a covered call is. When you add a covered call into this equation, it's like mom and dad are still paying for your insurance, and that's a good thing. And that's the concept of zero risk trading. With the covered call, you go out and buy a stock. This is the company Snap, the parent company of Snapchat, the little mobile online, take a goofy picture and send it to your friends application. The stock costs $17.98. We could get someone to pay us $1.75. That's the covered call. And then the long put is going to cost us $1.52. And the total price for all of that is $17.75. And this is the value of our insurance policy. We have the right to sell that at $18 a share. So for the next couple of months, that's the duration of our insurance, we have zero risk in this trade because we've got a total cost per share of less than 18, and our long put gives us the right to sell at 18. I could set up this trade right now today with any number of shares I want to set it up with, and I could go to sleep knowing that for a period of time, it's impossible for me to lose money on this position. And I can show you example. This is Under Armour. This is the company Under Armour that makes the shoes and the athletic equipment. This is Micron, the chip maker, chip manufacturer. I could show you example after example after example. And oops, this one, our total cost would be $120.17, and our insurance policy is $120. Guess what? This one has 17 cents of risk. Are you going to lose sleep if you have $120 per share invested in a position in Target, the retailer? Are you going to lose sleep if the maximum possible amount of money you could lose in the most horrific doomsday scenario that you could imagine would be a whopping 17 cents per share? I hope not. Oftentimes we can get these trades to zero risk. Sometimes there's 17 cents of risk in it. I can still sleep well at night. Now, let me back up here a second before I go into this. In every one of these cases, you can look at what your investment is in the trade and where the stock could be called away from you, and there's profit there. In this particular case, we could profit $4.47 per share. That's if someone exercised their right to buy the stock from us at 50, and $4.47 divided by a $45.53 per share investment. This is almost a 10% profit if the stock takes off to the upside, but we are capped at that 10%. If I go back to one of the other ones, the difference between this and this is just a little over $2. $2 divided by the almost $8 we're into it. Well, this one would actually be a 25% return, but we are capped at 25%. 25 is not bad. That's not a bad spot to be capped at when you have zero risk. But there's a way to profit tremendously in collar trading. Now, in the interest of time, what I'm going to very quickly give you kind of a snapshot look at for the next 5 or 6 minutes. If you want more detail on how this works, there is another video on the website that you can go to called Zero Risk Trading, and it's the power of collar trading and how collar trading can be incredibly profitable. But I'm going to show it to you very briefly here, and then you can watch another video if you want to. I think it's a 17-minute video that will go into this in what I'm going to cover in 5 minutes, okay? The profit in collar trading comes from a simple concept called dollar cost averaging. And you've probably heard of dollar cost averaging. When you buy a stock for $100 a share, and that stock goes down to 50, and you buy another share for $50 a share, your investment is $150 total, and you have 2 shares of stock, so your average price per share is $75. It's an incredibly simple concept, and it's often referred to as cost averaging or dollar cost averaging. Now, the only challenge for this is, imagine if you're dealing in 100 shares at a time, or if you're dealing in 1,000 shares at a time, or if you're dealing in 10,000 shares at a time. In order to dollar cost average this position down to $75 per share, you got to come up with a chunk of money right here to make that happen. And that could potentially be a lot of money you've got to come up with to make that happen. When we use the collar trade to dollar cost average, we don't have to come up with the other money. When the stock price goes down, the value of the long put goes up. And instead of having to come up with that $50 a share, we just sell the long put option. That's where the $50 comes from to buy that next share of stock. So the difference is, we've got our $100 a share stock up here, and because we took $50 in right here and spent $50 out right here, that second share of stock cost us $0. And now we have a $100 investment divided by 2 shares of stock, and our average cost per share is $50. And now when the stock price recovers, we don't even have to get back up to 75 to be at break even. We're over 50% profitable when we get back to 75. If that thing ever gets back to $100 a share, we are profitable 100%. And if you want to take the time to watch that other video, you can see this example with JCPenney of all companies. They're in bankruptcy right now. But one of my students back in 2013 put $4,300 into JCPenney, and 3 years and 4 months later, he had a 475% return. And the details of this are in that other video. We did something similar with our students. This wasn't a student of mine calling me after he'd made all this money and saying, hey, guess what I did with this collar trading thing? This was us sharing a trade with all of our students that they were able to follow us in from start to finish. And in about 36 months, we had almost 200% gain on shares of Under Armour when the stock was down over 50% from where we originally got in. That's peace of mind, folks. When you know how to trade like this, you possess the ability to never be afraid of the market again. Next time there's a black swan event and we don't know how to predict it, just like that competitor of mine I think was full of BS that they knew how to predict it. We can't predict when it'll happen again. I'm willing to bet it will happen again, maybe for something completely unrelated. And it doesn't have to be the whole market. An individual stock, like my situation with SanDisk, you never know when something like that's going to happen, but you never lose sleep over it again. You want to protect your hard-earned money. You want to give yourself an ability to have some phenomenal profits and never lose a wink of sleep again, ever. Learn how to trade this way. Now, here's the last piece of the puzzle. How do you learn this and be able to make some money at the same time? Nobody wants to spend money on an education program and then take the next 6 to 8 months to try and learn how to and figure out how to make it all work. Nobody wants to do that. You've all heard this before. I told you I'd share one of your favorite analogies with you. Feed a man to fish and you feed him for a day. Teach a man to fish and you feed him for life. I believe that. And I believe that is a really, really smart way. In fact, I believe that is an incredibly smart way to be involved in almost anything you do. Learn how to do it yourself so you don't have to rely on other people to do it. But I'll share a real quick story with you, and then we're almost finished here. I've got two really good friends who both are phenomenal fishermen. One is a good friend of mine for 20 plus years. The other is my brother-in-law, who I also consider a great friend, and they are both really good fishermen. I go out with them fishing on rare occasions, and they show me everything to do. They show me how to bait the hook. They show me how to set the weights on the hook. They show me how to set the little bobbin for the right distance, so that the line stays the right distance from the bottom of the river or the lake. They show me how to cast it out. They show me what to watch for on the water and when to pull that thing tight. And I go out fishing with them, and I watch them time after time after time after time. I watch them pull out fish, and I'm getting nothing. I'm getting absolutely nothing. Or I watch them pull out 5 or 6 good-sized fish, and I'm pulling out some little minnow. And the thought occurred to me a few years back, I believe they could teach me to fish given enough time. But if I had to go out in the wilderness right now today by myself, if I had to go out in the wilderness, and even if I had the best fishing equipment and the best tackle and the best bait, if I had no other way to get food and I didn't have them there with me, I would starve to death. I could not go out and do it on my own the way they could do it and rely on myself to not starve. And that's the thing this analogy is usually missing. What happens if the man starves while he's learning to fish? One of the things we excel at Safe Option Strategies is teaching you how to fish and keeping you very well fed at the same time. It's easy to teach you everything you need to know to become a very proficient trader, from the very most basic stuff all the way through the different types of strategies that you can employ. We can teach you all of this and help you become expert at it. But as we're doing that, we trade with you. We send you trades on a weekly and a daily basis. We show you the specifics of how to get into the trade, when and where to get out of the trade. We give you details on how to adjust the trade if it needs to be adjusted. We give all of this to you on a regular basis. So while you're learning to do it on your own, you can copy us and do exactly what we're doing every single step of the way. And folks, we have an unbeatable track record in the trades we send out to our students. This screenshot right here, I can only get half of it on the screen, so this is basically the second half of last year. The first half doesn't look a lot different than this. The second half of last year, but here's the totals for last year. We were up 92% on a real return on our portfolio last year in the market. And you want to know the trades on this, what you can see on this sheet, you want to know the trades that were my favorites? This one had an 8% gain, and it should have been about a 40% loss. And we adjusted it to profitability. This trade ended up with a 3% profit and should have been about a 15% loss. This trade was our worst trade of the entire year. We lost 26% on it. I hated it. Drove me crazy. Should have been an 80% loss, and we adjusted it back to only 26%. Same thing here, same thing here. These should have been big losses, and they were all turned into profitable trades. And every one of our students that wanted to had the ability to follow us in every single one of these trades all throughout the year. Every day the market is open, we do live classes, and those that can't be there live get a recording of the class posted on the website, usually within 20 or 30 minutes after. Probably 10% of all of our students have a schedule that allows them to be in the class live with us. So the rest of them watch a recording later in the day. And every one of these trades that we're placing with them, we are discussing and talking about. Sometimes the conversation is, man, isn't it great that this trade is going the way it's going? Isn't that just absolutely fantastic? And other times we're talking about, If this ticks down a little bit more tomorrow, here's the adjustment we're going to do. Don't panic. Don't panic tonight. Let's give you a reminder of how this adjustment works. And a lot of times the class is free flowing and students ask questions and we address different topics. We talk about what's driving the markets, but there's real support and real trades. Folks, I believe our education is hands down the best in the industry. I don't believe you will find a more complete investment education than what we offer at Safe Option Strategies. I told you at the beginning, our education is not cheap, but we make it very affordable. And this is why it's worth it. This is what we have done compared to what the markets have averaged. And this is just the last 7-8 years. I've got a record that goes back to 2004, and none of it looks significantly different than this. One time in all the times we've been providing trades to our students, 1 year, we did not beat the markets by double, but we still outperformed them pretty dramatically. In 2008, when the 3 major U.S. indexes sold off an average of 50% or more, that was the worst year we had in all the time we've been sending trades to our students, and we were up 20% that year. That's the worst year we've had in all the time we've been doing this. We are towards the end of May, and this is where the Dow and the NASDAQ and the S&P are currently at. Now, granted, they were down a lot further than that. Dow was down 35 at one point in time, so it's come back a long way. NASDAQ briefly about a week ago got into positive territory and then slipped back down. We're up 21% on the year. And we've got well over half the year to go. And what will probably be a pretty bullish year and give us an opportunity to show some pretty phenomenal percentage returns. Okay, don't log off. I'm almost done. This may be the best part, or this may be the most important part of this entire presentation. For those that are only interested in collar trading, you want that security, you want to put together combined stock and option trades that have zero risk and still have the ability to make phenomenal profit. If that's what you're looking for, we have a standalone course for our collar trades. We have a standalone course for the spread trades if you're interested in option only trading. And the majority of those spread trade strategies will apply to commodities, ETFs, other index funds, futures. The strategies will apply to all. The only thing I wouldn't use it for is Forex. I don't trade Forex. But these strategies in the spread trade program, the spread trade course, will apply to all of that. Our prices are way less than our competitors. I know for a fact that the closest competitor we have in this industry in terms of their content, and I still think we have about 40 to 50% more content than they have, and I know for a fact that our support is way better than theirs. Our closest competitor, for their full program, they do not have a choice to buy it lifetime. Their annual membership for their full program is over $5,000 a year. And their goal is to sell you upwards of $15,000 worth of products and courses and classes that they have. That's our closest competitor, and we blow them away in terms of the content of our education. Now, the reason I said this is the most important part, you see what these prices are. Let me get the marks off the screen again. Anyone who will take the time to fill out the form that is on the website below the video, the little box that holds the video has a form right underneath it. It says, please send me more information, a place for your name, your email address, your contact phone number, and any questions that you have. Do not put a phone number here unless you want a call from someone in our company. I do not employ salespeople. I have a couple of people, including myself, that will call you and answer any questions you have. We will not try to sell you any of our programs. But just for filling this out and inquiring, we will send you back an email, and if you want, we'll make a phone call to you, and we will share with you our discount that you will not find on the website. On the website, as you're looking at prices and promotions and offers, you're not going to find this. We are only going to share promotion price with those people that will take the time to fill this out, or if you would prefer to simply call us, write down this number. I'll leave it on the screen for a minute. If your preference is to give us a call, write this down. If you have to leave a message, I promise someone will call you back. And all we're going to do is answer your questions so that you can decide if what we're doing is a good fit for you. Folks, I'm going to leave you with one last thing. This style of trading, this method of market analysis and trading and adjusting and collar trading has literally changed people's lives for the better. I use one piece of criteria to measure the success of my company, and that is if you are successful. If you are not successful in what we are teaching and successful in the trades that we are sending out, then I do not consider this a successful company. I could easily live off of trading my own portfolio. I do not need to do this for an income. I could easily live off of trading my portfolio, but I have employees, and they're good employees. And I love them, and I love having them work for me. And I want to take good care of them. I cannot give the education away for free. And people ask me once in a while, I can't do it. I've priced it low enough to cover the cost of running a business and to take good care of my employees. I continue doing this because I love seeing the way it changes people's lives for the better. If what we're doing is not the right fit for you, if it's not the right time, even with our deep discount that we will offer you if you'll email us, if you still can't do it, I want you to know I wish you nothing but the best of luck and nothing but success in what you're doing. If you want to do this education, if you want to learn this, get a hold of us. I'll offer you a deep discount, and we'll find a way to make this work for you. Don't wait. Reach out to us. Fill in the box that's provided to send us an email or make a phone call and see if what we're doing will work for you. I'm confident it will, but you've got to be confident it will. Thanks for taking time to view our presentation. Have a great day. Bye-bye.